There's a stock that jumped 46% this week, moving from under 70 cents to over $1. And here's the strange part. There's no press release, no earnings beat, no FDA approval, nothing explaining why. When a stock moves this hard with no fresh news attached, that's usually one of two things. Either something is happening behind the scenes that hasn't gone public yet, or pure speculative momentum has taken over. I dug into the company itself to figure out what's actually here, because understanding the business matters even when the move itself is unexplained. Let's get into it. This company isn't a biotech or a tech startup chasing a breakthrough. It's a Chinese industrial manufacturer based in Wenzhou that makes stainless steel seamless pipes, tubes, and bars. That might sound unglamorous compared to the AI and biotech names that usually dominate this kind of coverage, but industrial piping is genuinely essential infrastructure. Their products go into oil and gas transmission, chemical engineering plants, power generation facilities, food processing equipment, and even aerospace applications. They export to more than 20 countries, including the United States, Mexico, Australia, Thailand, and several others, with distribution networks covering more than 20 provinces inside China itself. This is a real, established manufacturing business, not a speculative pre-revenue shell. And they've had real tangible wins recently, just not the kind that typically triggers a 46% stock pop. The company recently announced it won bidding contracts worth roughly $2 million combined, supplying stainless pipes for a large-scale pyrolysis project for a major Chinese coal and chemical conglomerate, along with a separate contract supplying a silicon and chemical components manufacturer tied to a Hong Kong-listed energy company. These are legitimate Israel orders, the kind of steady contract wheeze they'll keep a manufacturing business running, but they're modest in scale relative to the size of the price move we just saw in the stock. So if the news flow doesn't explain a 46% jump, what does? This is where you have to be honest about what you're looking at. Analysts covering this move have described it as almost certainly speculative trading flow, rather than any kind of fundamental re-rating of the business. In plain terms, that means traders piled in based on price action and momentum itself, not because new information came out that changed what the company is worth. Stocks like this, trading under $1 with relatively thin average daily volume, can move dramatically on comparatively small amounts of buying pressure, because there simply isn't a large pool of shares changing hands to absorb that demand without the price swinging hard. Let's talk about the valuation picture, because this is actually where things get interesting from a different angle. On a price-to-sales basis, this stock trades at a notably low multiple compared to typical materials and steel sector peers, which is the kind of statistic that draws in deep value investors looking for a business trading well below what its revenue would suggest it's worth. But that discount exists for a reason. The company's profitability has been under pressure, with earnings that have actually declined over recent years rather than grown, and the stock's own volatility profile is considerably higher than typical industrial names, moving significantly more on a weekly basis than the majority of stocks in the broader market. That combination, cheap on paper but with a shrinking earnings trend and unusually high volatility, is exactly the profile of a stock that swings hard in both directions rather than trending steadily. Technically, traders watching this stock have flagged some specific levels worth knowing. Resistance sits first around $1.30, and then again near $1.75 if that first level breaks. On the downside, support sits around 80 cents, and below that, around 67 cents, roughly where this move started from in the first place. The general expectation among traders following this name is that, absent a genuine fundamental catalyst, like a much larger contract announcement or an earnings surprise, the stock likely settles back into a wider trading range rather than continuing to run in a straight line. That's an important thing to sit with if you're considering jumping in after a move like this has already happened, because chasing a stock after a 46% run with no news behind it is a very different risk profile than getting in ahead of a catalyst. I want to be direct about what this setup actually is, because it's different from the other stocks we've covered recently. This isn't a story about a company that just eliminated a liability or got a regulatory milestone. This is a real industrial business with real revenue and real contracts, currently caught in a wave of speculative trading interest that the fundamentals alone don't fully explain. That doesn't mean it's a bad company. It means the current price action is being driven more by trader psychology and momentum than by a specific piece of news you can point to and say, that's why this moved. Those setups can keep running longer than logic suggests they should, and they can also reverse just as fast, once the momentum crowd rotates somewhere else looking for the next mover. The risk here is straightforward to state, but easy to underestimate. Low average trading volume means this stock can gap sharply in either direction on relatively little actual buying or selling. Declining earnings over recent years is a real fundamental headwind sitting underneath any short-term price action. And because there's no specific news catalyst driving this move, there's also no specific event to point to that would confirm whether the rally continues or fades, which makes this a genuinely harder setup to read than a straightforward catalyst-driven story. If you trade this one, it should be with the understanding that you're trading pure momentum and technical levels, not a fundamental thesis, and position sizing should reflect that higher degree of uncertainty. So there it is. A stainless steel pipe manufacturer out of Wenzhou, China, up 46% this week on no specific news, trading at a steep discount to its industry peers, but carrying real earnings and volatility risk underneath the surface. HUDI International Group, ticker HUDI, trading on the Nasdaq. I'll be watching to see whether any real catalyst shows up to justify this move, or whether it fades back toward where it started. If you want that follow-up the moment there's real news to report, subscribe now so you don't miss it.